So December 2023, question number 24. Okay. So I believe we are there. You can unmute and speak. If there is need, you can unmute and speak. Okay, so if we are there, I believe you can see my screen clearly. The question says that your new audit client, Safari Limited, began operations in 2021. Unfortunately, Safari Limited has not availed the audited financial statements for 2021 due to a disagreement with the former auditor. After observing all the protocols, you proceed to audit the financial statement for the year 2022. The client uses a part-time accountant whose work is to update primary records or prime records, prepare bank reconciliations, and some aspects of the ledgers. After analyzing the records, you are able to extract the following. So there is a cash at bank with all these items. There is cash in hand. There is trade receivables. We have the trade payables. We have the balances as at 1st of January and that 1st of December. Then we are told the owners introduced additional capital cash, of which 850 was agreed as share premium. LAD is to be revalued upwards by 10 million. The following amounts have been agreed for depreciation. We have the buildings, the motor vehicles, the furniture. The following adjustments are necessary. We have We have the accrued expenses, the prepaid operating expenses, the income tax, the credit loss expense, the expected credit loss on balance. Required, you prepare an audit working schedule having 5 sections for beginning trial balance, end-year trial balance, adjustments for profit and loss items, and statement of financial position items. Each section should have debit and credit columns. Therefore, you need 8 columns. So I think this one was not part of it. Yeah. So with that, what you do, we start to prepare the solution. We start to prepare the solution. This one, up here. I can move. Move it up here. Okay, good. So we want to prepare the solution, and this is how you go about it. Because I'm not very sure whether these are visible, let me just retain mine. Okay. So come here and type solution. We can bold this. Then we have a column that I want us to call details. And for this column, I want us to merge these two. Then we take to the right and upper. Then we are told to do start draft trial balance. So these two cells, we merge them. Then I also come and merge these two. Then I also come and merge let me start here. So I have start draft trial balance. Then we have add draft trial balance. So these two, I want to merge them so that I can have adjustments. Okay. FG, why is it trying to misbehave? So we have income statement. Then I come here as two of them, merge. So this is a statement of financial position. Okay. Then here I have debit, and this debit through copy, come and paste there, come and paste there. Sorry. Then we have credit. To C. Okay. Then I come here, Control V, and then this one, Control V. Okay. So let's do some, you can minimize. Sorry. So this one is like, I never merged. So this one, let me first of all remove that. Don't want this one here. I want to undo. Yeah. So that just want these two. Yes, that way. Then that means these ones were not enough. So I will come here. Control X. Then I come here, these two, I merge that way. So this is where I have my debit. Then this one should be my credit. Sorry. This is credit. So statement of financial position. This one I control X. Then I come here, I my mouse, why are you misbehaving? Okay, good. So this one must be expanded. This one also. So statement of financial position. So this one I don't require it. This one we don't require. So this one we can expand. This one we can also expand kidogo. This one we expand kidogo. So I think here I can bold. This one we can also bold. So we have the draft, we have the head, we have the income statement, and we have the statement of financial position. Can put them here at the end. Yeah. So these appears may require to be expanded. Expanded. Good. So are we all there? Someone to say whether we are there? Good. Let me put this dialog box up here so that in case you have said anything, I'm able to see. Okay, so having set up that, that's what they require. And I don't know why the examiner was saying you require 8 columns. These are 11 columns. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah. We are supposed to have I have the start, I have the head. Oh, there is one that I have not done. Okay. So this one is supposed to be for adjustments. Yes. Adjustments. Okay, so that this one now will be my income statement. Let's make that change. Statement. Then that means I have to come here and merge these two. And my mouse is not really cooperating. It has speak to very many. So it just require these two. as those two. So statement of financial position. So here we have debit, and then we have the credit. The credit. So this one has gone very far. Yes. So this one was supposed to be merged up to here so that you stop misbehaving here and move that way. Good. So now we have our 11 columns. That is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Good. So if we are there, let us now begin to record. Now, unfortunately, this one, we cannot be able to copy direct the figures because they have presented using what we call the horizontal accounts or the T accounts. So we will have to pick item by item. So the first item that we can see here is cash at bank. So let's come and record it here. Cash at bank or bank balance, whichever way you prefer. I think let's just call it bank balance. Bank balance. Now, bank balance at the beginning, it is 5720, and at the end, it is we can first of all do the beginning. This amount, yeah, we can be able to pick. Yeah, if we can be able to pick, then we just bring it here. We say this is equals to this amount, so that we are able to show the examiner where we have gotten that from. The next account that is appearing there is cash at hand. So we come here and record cash at hand. Cash at hand. Now, cash at hand, we can also be able to pick the opening balance, which is this one is a debit balance. So we enter. The next account that we can see there is trade receivables. So we come here and record trade receivables. Trade receivables. Trade receivables, they also have a debit balance. So we are going to say should be equal to this amount in the trade receivables. This one, you enter there. The next account after trade receivables is trade payables. So we come here and say trade payables. Now, looking at trade payables, this one, and we know from our accounting, it should be a credit balance, here. So I'm going to say should be equal to, I come to the trade payables, I pick this amount, and I press enter. After trade payables, the T accounts are over. So what now we have these details. So from there now we have RAD, we have RAD. So RAD valuation. And this RAD is an asset. So the opening balance should be equals to this amount here as the opening balance. It is followed by building at costs. Building at costs. Buildings at costs. So building at costs should be equal to the amount that is given here. We enter. It is followed by accumulated depreciation. Accumulated depreciation. Accumulated depreciation. Obviously, this is for the buildings. Sorry. Want to expand kidogo. Accumulated depreciation. Accumulated depreciation. So this one should be a credit balance. Once you get logged out, you log in. So this one is a credit balance. So we come here. The accumulated depreciation is for the buildings. Is this one. So we enter. The next item after that is furniture and equipment. We have furniture and equipment. Furniture and equipment, this should be a debit balance. So we rush there. We rush there. It is 100. So we press enter. Then we have accumulated depreciation should be there. So this one should be a credit balance again. Should be a credit balance. We come and pick this one. You enter. After that, we are given inventory. So this must be opening inventory. So let's just call it opening inventory. Now, inventory should be a debit balance. So should be equal to, we come here and pick this amount and you enter. It is followed by share capital. Share capital. So share capital, we know so well, should be a credit balance. So you come here and say equals this one. You enter. Share capital is followed by share premium. Share premium. So we come and say share premium. Share premium. Share premium, we also know it should be a credit balance. So we come and pick that amount, this one. We enter there. Then it is followed by, they have given us a long-term debt, but from our knowledge in accounting, we know that the share premium, the share capital, they go hand in hand with another figure that we normally call retained profits. So we can put it here, retained profits. Brought down So the retained profit, we don't have the amount for it. We shall have to look for it. Then we go for 10% loan stock. So we come here, 10% loan stock. Now this one should be a credit balance, loan percent credit, should be credit balance here. Enter that way. So those are the items that we have been given for the opening balances. So if they are the items we have been given for the opening balances, we need to check whether the trial balance is balancing. We need to check whether the trial balance is balancing. So we can just come here and say this is equals to sum of these ones. Sorry. From here all the way up to here, close the brackets, enter. Then I come here and I say this is equals to sum from here all the way to here, close the brackets, enter. So you can see it is not balancing. It's not balancing. So if it is not balancing, that means the balancing figure now should be the balancing figure should be the retained earnings, the retained earnings, and should be here. So what we are going to do, we will come here and because this is not the end, because this is not where it is ending, that was just a working, let us undo that and we undo this. But now we know. Now we know that that is the balancing figure. So how do we get that? Or maybe wanted us to get the, let's see, the balancing figure here should be equal to the sum of all these, sorry, the sum of all these, close the brackets, minus this amount here, minus this one, minus this, minus this, minus this, minus this. Enter. Have you followed that? Someone to say yes or no?
Yes.
Good. So now, if we already know now it will balance. There is no need of wasting time to check whether it balances. But if you want to confirm, if you want to be double sure, you can quickly pick this one and auto sum also. Then you pick these ones up to here and you also auto sum. Yeah, you can see, although they have gone to different points, you can see this one and this one. Yeah, so the opening to our balance, it may balance. Here you go. So let's clear that. Let's clear these ones because we have not yet come to the end of, yeah. Good. Now from there, we need to go to the other items so that we see how they are going to affect us. So we come back to this account, this one. You can see this account, the cash at bank, it has several items. So we pick the items which are appearing in this account and we have not so far captured them. So if I were to start from this side, the trade receivables already we have captured. Cash at hand, it is already captured. Then we come to the trade payables. They are already captured. But something like distribution expense, we have not captured. We have not captured. So we come here and bring it here, distribution expense. So let's write distribution expense. Tutakuja kuishughulikia baadaye. It is followed by who? It is followed by administration expense and other operating expenses. So administration expense. Haya, nimeona imefuatwa na mwingine anaitwa other operating. Nimekuambia when you get logged out, you log in. You log in immediately. So I'm supposed to write other operating expenses. Let me see what else follows that account that we have not captured. Interest on loans, dividends, and motor vehicles. So interest